So I'm excited to announce our second research paper session. The title is Minorities Access to Credit. Our moderator and our presenters are all here in person in St. Louis. And as I mentioned before, our community bank discussant, Jordan Miller, is joining us virtually. So to kick off the session, we'll turn it over to our academic moderator, Erica Zhang from the University of Southern California. Erica.
Thank you so much. All right, welcome to our second research paper session, and we have three fantastic papers on topics related to minorities' access to credit. And so the first paper is going to be presented by Ruidi Huang from Southern Methodist University. And Ruidi, you have 15 minutes. The floor is yours.
Oh, I need to turn this on. Hold on. Is it on? I think it is. Oh. Okay. It's okay. While we're working on the technicals, I want to just thank everyone for coming, and good afternoon. And thanks for the opportunity to present our paper, and a special shout out to Jim and his team for putting together a great conference. I'm Ruidi Huang. I'm an assistant professor of finance from Southern Methodist University in Dallas, Texas. And this is joint work with my colleague, Eric Meyer at SMU, and Scott Frame from the Dallas Fed, as well as Adi Sundaram from Harvard Business School. And in this paper, we study the impact of minority representation at mortgage lenders, and the usual disclaimer applies. Scott told me I have to say that. So is this the green button to push? Oh, there we go. So racial disparities, oh, what happened? So racial disparities in economic outcomes are striking, right? Thinking about wealth, income, education, health, so on and so forth. And it's been a focus of policy and research to better understand what's going on and what's the underlying sources of such. And there are obvious reasons, such as historical reasons, and there are also less obvious ones. For example, when you match minority students with minority teachers, the minority students have better achievements. And in terms of healthcare, if you match minority patients to minority doctors, the minority patient seems to do better. So research have shown that disparities can be self-reinforcing. So this means that if minorities are underrepresented in those critical services, then what's going to happen is it will have a bad impact on minorities' outcome here in terms of their health or education. So in this paper, we are trying to evaluate the impact of minority representation at financial institutions, so loan officers, and the outcome in the US residential mortgage market. And arguably, this is probably the most important credit decisions households have to make, and this also speaks to their future wealth accumulation and the benefits of home ownership, right? So this is our paper, the whole paper in two graphs. Hopefully get you over a preview of what's going on. So here we look at, so the graph here is focused on the two panels on the left. Here we have mortgage approvals. And the dots and triangles represent the approval rate. So let's look at the first graph there. So looking at white loan officers, and for their approval of mortgages, actually there's a pretty big gap between white applicants versus minority applicants. And move on to the second panel where you have minority loan officers, and we see that they actually they're able to close the gap in approval between minority and white applicants. And the two things I want to note here is, first of all, you might say, oh no, minority loan officers have lower approval rate overall compared to their white counterparts, and that's because there are two reasons. So first of all, minority loan officers tend to work in lower income neighborhoods, so the approval rates are lower by design, and also we're not controlling for anything. This is just the raw data, okay? So that's so what we see from the left-hand side is that white loan officers approve fewer minority applicants, and the minority loan officers are able to close the gap. But what's going on here? Why is this happening? And then we turn our attention to mortgage default, so the outcome of the loan, to see can we see any potential mechanism. So on the right two panels, we plot mortgage defaults for white loan officers and minority loan officers. So in panel number 3, you see there, for white loan officers, they actually see more minority defaults compared to white defaults. And again, for minority loan officers on the far right panel, you see they don't have much of a default gap between their minority versus white applicants. So what the key takeaway here is that white loan officers approve fewer minority applications, but they have, even though they are approving fewer applications, but they have a higher default rate, and minority loan officers are able to close this gap. So what's going on here, we suspect it's because of minority loan officers have an information advantage. So they know something about the minority borrowers that white loan officers do not know. And here, because if you expect there's discrimination on the white loan officer part, you would see a lower approval rate as well as a lower default, right? But they're not. You see higher default and the lower approval. This suggests there's information advantage on the minority loan officers. I'll walk you through our analysis to convince you this is what's going on, and hopefully you'll be convinced at the end. So here's a quick overview of the paper and what we do. So in this paper, we link the near universe of mortgage loan officers to the applications they handle, and we find that minorities are significantly underrepresented among the ranks of loan officers. And minority applications are more likely to be completed, approved, and finally originated when they are working with a minority loan officer. And despite minority officers approving more minority applicants, they have lower defaults. So this is consistent with an information advantage story. And further analysis shows that there's soft information that minority loan officers have. And lastly, we want to show that underrepresentation definitely matters. It can account for up to half of the unexplained ratio gap in mortgage markets. So quickly, our data. So the first data set, so this is a massive data exercise by putting together 3 big data sets. So the first one is coming from the nationwide mortgage licensing system. I'm sure a lot of you are familiar with the MLS data. A big shout out to our CSBS colleagues who are very generous to share us with the entire historical data from the loan officer registry. And we're able to see the loan officer ID and where they work and their entire work history. And we link that data to the Confidential Home Mortgage Disclosure Act data, the CHMDA data, where we're able to get the borrower information such as the race, their credit score, DTI, and all that good stuff. And for us to measure loan performance, we use another data set from the FHA, where they have a longer panel from 2012 to 2018 to look at all the FHA mortgages and their performance. So at the end of the day, we use the link data for the near population of home purchase mortgages for 2018 and 2019, and for the whole population of FHA home mortgage purchases from 2012 to 2018. So first, we want to show minorities are underrepresented among loan officers. So in the table you see here, so the first column shows the US population. So 61% are white. And if you look at the race of loan officers, 85% of them are white. So we definitely show a pretty big gap there in terms of representation among the loan officers. And in the graph on the right-hand side, we plot at the zip code level what's the population share versus the minority loan officer share. So if there is a 1-to-1 relationship, you would expect a 45-degree line, which is that solid black line up there. However, what we actually see are the red dots that's from the data, where it's beneath the 45-degree line, suggests that on average, in almost every zip code in the US, loan officers are definitely, minority loan officers are underrepresented. So with that out of the way, we want to see what's the impact of minority loan officers on access to credit. So first of all, some simple tabulation. As you can see, looking at the completion of their mortgage applications between white and minority applicants under white loan officers, that's columns, that's the purple shaded region. You see white loan officers are able to complete 85% of the white applications, but only 81% of the minority applications. But for minority loan officers, they're actually able to close the gap, right? You see the similar pattern. If you look at approval, you see that definitely minority loan officers are able to close the gap between minorities and whites. And if you look at the bottom row there, the all-in origination. So this is the conditional application is completed, approved, and taken up by the borrowers. And we see that white loan officers gets to originate 77% of white loans, but only 69% of minority loans. And for minority loan officers, they are basically able to close this gap in origination. Okay? So that's actually just summary statistics where with nothing controlling anything. We're not controlling for the borrower's credit score or DTI, LTV, and all that good stuff. So here we take it more seriously, and we run a regression. Basically, the outcome variables are their completion, approval, or origination, indicator variables for whether the borrower is a minority and whether the loan officer is a minority, and the interaction term of those two. And what we control here is a host of variables that was given to us in the expanded CHAMDA data, including year application age and their income ratio to the MSA they live in, and also whether it's jumbo loan or joint applications. And we also control for their credit score, FICO, LTV, DTI, and all interacted with the type of the loan they are taking out. And so what we find here, starting with completion, is so just focus on that purple column there. So the first number tells us for a white loan officer, they are actually 1.9 percentage points less likely to approve to complete a minority application compared to a white application. And for a minority loan officer, they are able to close about 1.1 percentage points of that gap. And the results are similar if we look at approvals. So here we control for everything I told you before, and we have a branch times year fixed effects. Basically, we're comparing two loan officers working in the same bank branch, working in the same year, and one is white, one is minority. And what we find here is that so the white loan officer will approve 2.6 percentage points fewer minority loans compared to white loans. However, the minority loan officer will be able to close that gap by 1.4 percentage points. And the results holds true if you look at originations as well. And you might be worried, hey, there should be maybe some kind of selection or matching going on, that certain borrowers want to work with certain officers and their reputation. Some people are just nicer and stuff like that, right? That's valid concern for sure. So what we do here is we want to use some statistical tools called instrument variable to try to achieve a quasi-random assignment of loan officers to borrowers using this kind of statistical tool. So what we use is we use loan officer work schedule rotation to instrument for an application being handled by a minority loan officer. So I will not bother you with the details, but for all the academics in the room, trust me, it passes all the smell tests and all the exclusion restrictions, first stage and everything. And the results look very similar using the IV. Yes, Alan, for sure. Looking forward to that. So that's the slide for academics. I will skip. And so the results are very similar. So it tells us that the minority loan officers definitely help to close the gap in mortgage access. But what's going on here? What's the interpretation, right? Is this because minority loan officers are having additional originations due to higher risk, or they have less taste-based discrimination, or they have some sort of information advantage? So here we turn our focus to the loan performance data to distinguish between those different channels. This is the graph you have seen before. What we see here is that the white loan officers are actually having higher default for their minority applicants compared to the white applicants, and the minority loan officers are able to close the gap, right? And this tells us, so the regression results shows the same thing as the graph. So minority loan officers will be able to basically close the gap in default. So this whole fact, so higher minority approvals and the lower defaults, suggests an information advantage for minority loan officers. And we want to show you how we can kind of get at this point. So we look at the cross-section as well as different reaction to hard information. So first of all, in the cross-section, we find that our results, the minority loan officers achieve higher approval, and the lower default is particularly strong for officers and applicants of the same race or ethnicity. There's definitely an in-group favoritism here. And we also find that the applicants with living in a lower income neighborhood, the results are particularly strong. That's when the when hard information is very noisy, right? And the third is when applications are at small banks or community banks. That's when the personal lending or the relationship lending still matters, where you get a wealth of soft information by just talking to the borrower. And we find very weak evidence at fintech as expected. And lastly, this results also get stronger when minority loan officers have more experience handling minority applications. So this pattern suggests that minority officers have a soft information advantage with minority applicants. And we also, in another way to show this is to look at their differential reaction to hard information between white and minority loan officers. Here we look at all approved minority loans, and the only difference, oops, how can I go back? Oh, here we go. So between the, I thought there's a pointer, but maybe not. Oh, there is, okay. So the only thing that's statistically different is the credit score and debt-to-income ratio. Let me interpret the numbers for you. What does that mean is minority loan officers actually weigh less on credit score and weigh less on debt-to-income ratio. So they are more likely to approve loans with a lower credit score and a higher debt-to-income ratio. What does that tell us? You're all bankers. If you see that, that means those loans are more likely to default, right? They're higher credit risk. But what we find is those loans are less likely to default, which means there is some sort of soft information the minority loan officers possess. So here's the takeaway. I only have 50 seconds to go. So I think this research is economic and policy important because minority representation definitely matters. So here are some stats from our sample. So 95% of white applicants work with a white loan officer, but only 22% of minority applicants work with a minority loan officer. So minority loan officer workloads are already geared towards minorities. So they deal with about 66% of minority applications as their day-to-day work. So if we want to significantly increase in minority representation, would require us to equate in-group benefits across the ethnic groups. So we do a little thought exercise. So what if minority applicants are as likely to work with a minority loan officer as whites are to work with a white loan officer? So we want to take that 22% to 95%. If we can do that, this will close 46% of the minority origination gap. So I want to take a quote from the survey the CSBS presented this morning. So one of the interviews by Rogers Pope Jr. And he said, we are better able to serve less conventional borrowers, often making credit decisions, at least in part, through first-hand observations of the borrower, right? The key takeaway from this paper is that financial institutions these days are relying more and more on hard information and standardization. However, the human face people interact with still matters in this case. So that's our paper. Thank you so much.